Ooh. Yes, we're flying off into space with a strange indicator called the ADX. Let's roll the intro. I'll tell you all about it. Hi, welcome to the channel. If you haven't been here before, my name is Langers, and I am the Scruffy Trader, as you can see. And I'm trying to put trading in the real world, give a little bit of education, and also show you what I do for a living. But today is education. And it's a little shout out to Stefan from the Scruffy Squad, who's asked if I would explain about the ADX. Stands for Average Directional Index, and it came into being by the famous Wells Wilder. That's the chap who brought you the ATR and the RSI, created in the 70s, and these indicators are still being used today. But this one is quite little known. But talking of little known, he's a little gnome.
I am not a gnome.
You are a gnome. The provider of coffee. Because we all know Scruffy likes a coffee. I'm going to have that on a t-shirt soon. Where are you running off to?
To work.
Yeah, right. Sorry. As I was saying, little used indicator, but it's actually really very good. But as with most indicators, it can't really be used on its own. Okay. So the normal settings for it is a 14 period. Okay. And the idea behind the ADX is to show you a trend rather than direction. However, there is a caveat to that, because there's another part of the ADX that tries to show you direction. Okay. So what we'll do to start with, we'll concentrate on the ADX line. I'll show you what it is, why it is. Then I'll jump onto the screens and show you it on a chart. And hopefully, if I see a setup while I'm working this out, I will take it and show you the ADX in action. Okay? So let's have a look at the makeup of the ADX. So what you have is a single line that just moves backwards and forwards. And the ideal situation is this, where you'll see it come down, under, and back up, like so. And I know you're looking at that thinking, well, that's just 3 lines and a smiley face. You're right, it is. Okay? But these numbers have relevance. Okay? When we go on the chart, you'll see that they're not there. You have to manually put them in. Okay? The most preferred number is 20. And the belief is that as the ADX line crosses over the 20 line, it is now becoming into a trend. And then you'll hold your trend right the way up to the 40. And when it gets to above the 40, you're kind of looking to get out because the trend is going to come to an exhaustion point. Okay? It can run up to 50 and 60, but think of it like the RSI. When it's up there, you know it's not going to stay there for long. Similar principle. Now I add in a 15, because when you're on the charts, and you'll see that shortly, by the time that's recognized what's going on, the trend's almost over. The move is already gone. And unless you're on a monster trend, it's not going to do you any favors. Okay? So I find the 15 is ideal. And this zone here, from there to there, is the start of a trend, which is where you want to get in. But as you've seen me do this with other indicators before, I find the 14 too quick. And the reason being is we're dealing now with 24-hour markets. When the RSI and the ADXs, etc., were brought into being, they were based on an 8-hour working day. So it doesn't take into account a 24-hour market. So slow it down. Set it at 21. Slows everything down and allows all the signals to smooth out. Okay, so that is kind of your ADX, and that's all it is. It's a single line crossing over a couple of parameters. Now there is another part of the ADX which I was saying can give you a little bit of direction. Okay, so if you bear with me. It works in two ways. You either have it as a histogram or as what I would call lightning bolts. And you'll have them where it's like a jagged line like so. And then you'll have another one going the other way like that. And what they represent is red is a downtrend, green is an uptrend, and whichever one is on the top is the stronger trend. So at that cross there, that would assume that the sellers are in control. Green one means the buyers are in control. So buyers, sellers, you're working off the cross. All right, but I'll show you that more on a chart. Okay, so let me jump onto a chart. I'll see if there is a setup. I'll show you it in action, and then I'll break it down. Okay. Okay, guys. So we're gonna do a live test of this. So we've got our setting at 21. We're at red, and it is now starting to break the 15. And we've still got plenty of meat on the bones to get down here. So this is indication pretty well that this might go our way. Now I'm working it on a short time frame. Same drill as always. I look for 15 pips. It's quite reasonable. There to there. Reason behind it, very, very simple. That is my working area that I would normally work within. 15 pips puts me on the bottom of this structure point. So that makes everything makes sense. So that the market come to me, in other words, it has to punch through to trigger the order. And the reason why I do that is very simple. If I don't let the market come to me and I immediately just go sell, what if it goes the other way? Happens all the time. So I want the momentum to just go thump straight in, pick the order up, and hopefully be in and out. That's the main plan. There we are in. So it has triggered it, and it's triggered it on this here. And again, if you remember from the description that I've just said, what you're waiting for is the ADX to come under the line, bend, and then come back up on an upward push. And you want this to be red. Okay. Now you can flick it back to the lines if you prefer that. And if you have it that way, what you are wanting to see is that line and that line spreading apart. Okay, immediately goes into profit, as we can see, and it just gives you a half better chance at actually making some money. But again, you've got to be a little bit careful. This indicator, it's not foolproof. It really isn't. You know, you have to combine it with other things, which is why when we were looking at this, I showed you this little structure point here as a valid target. Okay? Because you literally don't want to push your luck too much. What we'll do is we'll just see if this actually plays out. All right. If it does, if it doesn't, stress ball. And that was that, guys. ADX in action. All right. It's gone to the bottom of this structure point. As I said, I used the cross to get in, plus this and this. It could have gone higher. I'm not great. That was that. Okay. So now you've seen the indicator in action. That trade was taken on the 21st of August 2020, if you're watching this in the future. I just want to quickly strip it down and show you what the makeup of that indicator was. Now, the settings that I used in that trade was 21, so that's 21 candles back, a line of 15 to give me my cross and my signal, and an upper line of 40. Okay, so if we move it forward, there it is there. Okay. So on this example, what you would see, and this is like a nice example, the idea is for it to catch and continue a trend. Okay. And this section, which I'll just isolate, I'll just take off these directional indexes. And what these actually stand for, it's directional index positive, up, directional index negative, down. Okay? Green and red, pretty simple. Right? But the ADX itself is this line, as I showed you on a whiteboard. And what you're looking for is for it to come down under the 15. So this is like no man's land under here. So I put in a little red box just so it highlights it. So if you can imagine, if it's in the red box, nothing. No trades, no trends, nothing. It's just in the doldrums, okay? Which you can kind of see there to a degree. And the thing with any indicator is, it's not going to catch the top or the bottom, all right? They really can't, because by nature they are lagging. So what you want to do is try and have it in a situation where it can catch a strong trend and get you the middle bit, you know. And you've heard me say it on so many videos, I don't look for the top, the bottom, I look for the middle. So this indicator is actually quite good at doing that. Okay. So there's the sweeping move that we were looking at. And it's under, and all it means is there's a bit of indecision in the market. It's not really going anywhere. And then when it starts gathering momentum, you know there's a trend coming. And the way it works a trend out is it's looking for higher highs consecutively, or lower lows consecutively. There's a massive mathematical formula. I'll not go through it, but basically that's what it's doing. And the more they come, the stronger this line increases, which then tells you you're in a trend. Okay? But it's non-directional. It's not saying if it's pointing up, the market's going up. It just means that there's momentum in the market. Okay? So the second part of the ADX is a directional meter, and it tries to show you what the direction is, and it does it through what I call these lightning bolts, which I pathetically showed you on the whiteboard, because I am no artist. I could have said something and it involved beer and a toilet, so I'll let you work out what that is, okay? But sorry, northern humour. What this does is it tells you who's in control, whether it's the buyers or the sellers, and whichever line is on the top is the dominant force. So if it's red up on the top, it is the sellers, and if it crossed over there, it is the buyers. But as you can see in this section, it's very choppy because the market is also choppy. It's not going anywhere, so you don't know. All right. So that's choppy. This is choppy. That's under there. Go have yourself a cup of coffee because there's nothing to be done. You know, there's no trades. So then you wait, and you wait to see this. So that's crossing. So this is potentially the start of a good trend. And if you look at the market up over, it is. So there's the first leg, shallow pullback, and then it's off to the races. Okay. Excellent. Which direction do you go? Well, sellers are on the top, so we are short. Now you combine that with some good support and resistance, a Bollinger Band maybe, you can build a good strategy using this as a trigger point. Okay. Now also within the ADX is a histogram, and it'll work like so. And it's very similar. Okay. If the histogram is red, sellers are in control. If the green's showing, the buyers are in control. So again, you can go like so. I prefer a histogram to the lightning bolts, to be honest. So we'll get rid of that just so it's now nice and clean. You know, I can see the red histogram. That's telling me the sellers. It's a very quick visual to look at it. There is a cross across the 15. I'm ready to rock. You know, so there's my cross. As soon as I see daylight between them two, there is my signal cardinal. You put an order on the other side of it, because you always let the market come to you as I've just shown, and then get your order. Boom. Very simple. Okay. So I hope that kind of makes a bit of sense. Like I say, Stefan asked if I would break it down and have a little look at it in my strange way. And it's one of those indicators that is under the radar. You know, everybody sort of gravitates to a stochastic and an RSI and the MACDs of this world, and they kind of forget about this little chap. So there you go. Hopefully that kind of made a little bit of sense, and you can put that into your little trading tool bag. Okay. I'll try and revisit this again sometime, simply because it is one of those forgotten indicators, and I'll try and pop it on a chart every once in a while I'm doing live trades, just so you can see it in action. Okay. There you go. So remember, guys, do what you love, and money will follow. See you all in the next one.